Now, Verizon's Q2 results out this morning. Earnings coming in at $1.22 per share, 4 cents above estimates. Revenue topping Wall Street forecasts as well. And joining us right now is Verizon Chairman and CEO Hans Vestberg. What did I call him this morning? Hans Vestberg or something?
Hans Vestberg.
How do you like that?
No, I'm Hans Vestberg.
It was early.
Yeah.
So where are we, and what does this say not just about your own business, but what's going on in the sort of larger economy right now?
First of all, I think what we hear from all other CEOs is that it's a dual market. We see the consumer sentiment is strong, and you read all the economic numbers, they're a little bit different. I think in our businesses, our product is so important. Mobility and broadband, you cannot live with it, you cannot work with it. So we have a resilience in our industry in Verizon. And then secondly, in the case of Verizon, we have the highest quality customer base in the industry. So of course, our payment are good. The way we don't see any deterioration on payments from our customers. So it's a really resilient, strong business on a product that we all need.
How much right now is this about taking market share from others effectively versus a growing pie, if there even is a growing pie left? I mean, it feels like almost everybody has some kind of access.
Yeah, I think that the balance is actually how we can grow. I mean, we have so many vectors we can grow. We can grow on broadband, fixed wireless access, fiber. We can grow on prepaid. We can grow on how we stack up our offerings with perks and all of that on our wireless. The connectivity layer is fairly a couple of percentage growth, but there's so many other things, and you see it in our numbers this quarter. I mean, we grow. The first half year, our service revenue is up 2.4%. That's adding $1 billion more in revenue the first half year, and also adding $1 billion bottom line. So growth on bottom line is 4.1% the first half year. We had an EBITDA in the second quarter of $12.8 billion, highest we've ever had. So we get leverage, we can still grow, right. We build it on the best network.
What does the capital investment look like right now? The other thing that's actually held up, interesting, I don't know about in your business, but more broadly, is there's been this sense that, given all of the trade wins, we were just talking about trade issues and everything else, that companies were going to hold back on big investments. If you were going to build a new building, you weren't going to do it. If you were going to make a deal, you weren't going to do it. But that has not, and maybe it has happened, but at least it doesn't seem like that's really...
No, it hasn't happened. I mean, our midpoint is an increase again in CapEx to somewhere around $18 billion. I mean, the last 7 years, during my 10 years as CEO, we have invested $200 billion in the United States of America in infrastructure. $200 billion. That's what so we are long term. We know that having a great network, investing for our customers is important, and that's what the returns we're giving back
on right now. On the B2B side of your business, if you will, what are you seeing from them?
It's very interesting. On the business side, fairly normal, both on the broadband and the wireless. The same on SMB. Where we're seeing a tougher time is public sector. Because the public sector, and we have a very good market share in the public sector. So, of course, we have now seen efficiency work happening in the government. So we had an outpour of customers there this quarter and even the first quarter. Probably going to continue a little bit into the second half. But then we believe, but we don't know, that's going to abate.
Dare I ask about fixed line wireless? We live in a cable world. How's fixed line wireless going for you? What do you think and what do you see happening in terms of the breakage of the cable bundles and the like? How important is content to you as selling it as a bundle versus, I assume you'd prefer to not even have the bundle?
We don't have the bundle. We have the perk system. The perk system is basically, we have $10 for Netflix, $10 for Disney Plus, etc. We said early in the year, we're going to double the amount of perks we have. So we're going to go from 7-8 million last year to 15 million perks. That meaning that our customer takes broadband or mobility, and then they add the Netflix or Apple Plus or Discovery or whatever it might be on top of the network, and we all have value on there. So customer can save money if they do it through us.
You've spent a lot of time and money and attention in the sports world.
Yes, I do.
Why? And what do you think's going on with all the valuations in sports land? I ask because... Yeah. You're just engaged in the whole universe. Yeah,
first of all, I think that why we are in sports, of course, it's the local community is so important for us. We are in every community of this country. Of course, being with a sports team, which is one of the most important things there are in the local places. That's why we are in NHL, NFL, NBA, IndyCar, etc. And we think that's an important part for our customers. On the valuation, I think that it's a little bit hard to to actually see where it's going. But obviously, it's like sports content on advertising. It's going like this. I think also the same goes for owning a team. I think it's very few that can do it, but they are ready to pay.
If I was going to buy Verizon stock, should I think I'm buying a 6.5% bond, and that's all I'm going to get?
If you see that our performance right now, when we're growing 4% bottom line, you also have
but nothing for the last 8 years.
No, so basically our beta has been growing some 4 or 5%.
No, but the stock price. If you bought the stock price.
Oh, okay. Yeah, that's true.
You bought 8 years ago, you've gotten a yield, but you haven't gotten any capital appreciation.
You're right that if you look at our share price, we haven't had the performance we wanted.
Will that change, do you think?
I think so with the growth we have right now. I mean, we have not had this growth in many, many years. I mean, 4% bottom line, EPS up 6%. So we have that, and then we have the best dividend yield in the market. I mean, 6.5%. We have been increasing our dividend 18 consecutive years.
Right.
And there's no one in our industry have done it. So I feel good about our strategy. I feel good what we're doing. I see that it's getting yield right now and leverage on our bottom line.
Can you weigh in on this? We had Tom Lee sitting here. We were talking about Apple.
Yeah.
There's lots of speculation about two things about Apple right now. One is that they may come out with a phone that's a flip phone, like I mean, not like the old StarTAC, but a double screen size, and that could be a huge new market. It's a big market in China, not here in the U.S. What do you think? And also the big LLM question, which is the one piece that Apple doesn't have that that everybody else seems to, including Android, is that they have their own very successful large language model.
What I've said before, you know, the times when we have growth in people changing the phones are two. It's one, you go from 3G to 4G, 4G to 5G, or hardware redesign. Those has been the times. We have, of course, seen flip phones in the market already, both on the Android system. There are some interest, of course, so I cannot really tell what's going to happen and whatever phones will come out. But historically, that has been when we have seen a higher growth rate of phone substitution.
How much traffic are you getting off of the large language models right now? I mean, every time that I'm asking a question to OpenAI or to Claude or to whatever, is that a huge user of broadband
No, not
services?
at the moment. Right now, a lot of the things are on the phone. I think in the next step, when you're going to see enterprise application for AI, we're going to see much more edge computing. Right now, all the LLMs are run at big data centers, but ultimately they cannot be there because of transport costs, security. Companies like us want to have it close, so it's going to move closer, and that's where we come in with our AI Connect, because I have power, I have transport, I have fiber, I have MetroNet, I have cooling and space. So of course, that's what we launched in the beginning of the year, AI Connect. And we have doubled the funnel in less than 6 months. So we have a funnel of $2 billion right now, only for AI companies.
And then finally, I mean, one of the things that T-Mobile and I think I think all of them have now, right, is going to be satellite, some form of satellite.
Yeah.
And Amazon, which is a partner of yours, is coming on with Kuiper.
Yes.
So what does that mean to your business?
It's a great compliment. I mean, first of all, Verizon's network is covering 99% of all the population of the U.S. So it's going to be cases outside there where it's really complementary. I would say emergency SMS, emergency calling. I think that's going to be really important because there are state parks where we are not allowed to cover, where you can be and you want to make a call. So we have our agreements with AST, and then, of course, on the Apple phones, it's already there. So we already have that functionality, but we always start with having our best networks covering more customers than any other network in the market.